Welcome to TMS Insights. It's June, which is a busy time of year for financial markets. A great time of year for people like you, Ben, and an interesting time for anybody who's related to markets, because we've seen one of the more profound 3-month periods from the strength of the market through March, which was record highs, and we saw a massive sell-off in April. Ben, it seems to be hard to even remember that period. It's only 2 months ago.
Crazy. You very rarely see the V-shaped recovery, but we've seen it well and truly, and I think really probably driven by, I think, the US quarterly earnings season, which was it was a really stellar sort of period. We're in a falling rate environment now globally. The ECB cut rates last night again, and it looks like the US might go into a mini rate cutting cycle again in the second half of this year, which is a tailwind for equities. So, yeah, I've been surprised. There's been a lot of chaotic sort of stuff going on the sidelines, but the markets are, I think, increasingly looking through it.
It's an interesting one to sort of go back and look at April. And I mean, we thought our prices have fallen too much. It was felt odd, but the fact they did, is that something we should be worried about, or just thinking that, it's just the market misread the whole tariff story, and we can be comfortable in the normal things we look at, as we always say to people, interest rates and earnings, but sentiment is a short-term factor. Can we just dismiss April as the sentiment was a misread by the market players?
It's hard to know, isn't it? I think the other thing that has been going on that has been less spoken about is what's going on in the bond market, and there's been some really historic moves in Japan and the United States. So I personally, I think the market was just completely wrong-footed by Trump. But there's the taco trade. The Trump always chickens out.
And he does.
And there's been an ETF created in the United States that you can play this trade. So it's a weird world, isn't it?
It's a weird world, And it's interesting because we were looking at those Japanese bonds that were running up so much, big sell-off in the bond market. But that's even moderated too. So when you aggregate all the economic news of late, it hasn't been that bad. It's been pretty good. As we said, I mean, we were seeing those rate cuts coming in. Earnings have been good. And so from an equity investor, they're the things that will always matter. And let's jump into those and talk about those. Talk about some of the earnings results. We know we had a good earnings season out of the US. Really very good, actually. Locally, we had some reports. It's not our main reporting season, but we do get a few companies who report out of cycle. And each of them had a different story. But
they did.
A standout company here, global really now, Xero. That was a cracking number.
That was the pick of them. And I think the not-so-new CEO anymore has done an amazing job at just dialing back on the capital reinvestment back into the business and letting that a lot more of that revenue drop down. But the growth that they're experiencing across the world continues to be very strong, and then they're starting to pull the lever on charging every person a little bit more, and it's just starting to take that flywheel
model.
We see those businesses take. So it looks I think that was the highlight of the mini earnings season. Aristocrat, that was probably
big result,
a poorer one,
and
by Aristocrat standards.
And it's been strong running into the result. It was sold off. What did you find out about it? Because its other listed competitor we talk about a bit is Light & Wonder, and they've been poorly performed really of late. Aristocrat have been well done. What did you see in that result?
Well, look, I think the revenue growth and the profit growth underwhelmed versus what the market was expecting. And there were, listening to the CEO present, he highlighted that there'd been some very unusual buying patterns in the United States. So he sort of said, we definitely had some big customers who were trying to get ahead of tariffs potentially. Some who were sitting on their hands because they didn't know what was going to play out. And in his words, he sort of said it was a very unusual quarter in particular, the last quarter of that financial year and the start to this year. They've exited some of their digital businesses, so it was a bit of a messy one, but I think the thing I would probably highlight is the coming into the result, the stock was trading on a PE that we haven't really seen it trade on in recent history, and it needed to really deliver to
justify it.
And it didn't.
So it just got derated a little bit.
Yeah.
Build up that rating from years of performance. And then, if you drop a fair bit in share price terms. Fisher and Paykel Health, good result, well received by the market.
Great result.
Yeah.
They're the big talking point on there. So we had all the concern about the GLP-1s a couple of years ago. There's the Ozempics and the Wegovy's that would have a big impact on these businesses. As it's turning out, and the same's the case with ResMed, they're actually creating stronger earnings growth, because as people go to get tested to get these drugs prescribed, the doctors are telling them they've got sleep apnea and they need to get help. Now, Fisher and Paykel has a smaller part of their business from sleep apnea, and the big part's in the hospitals.
Dehumidifiers and all that.
Right, and all the surgical use. So, but the issue they've got is their largest production facility is in Mexico on the border of Texas. And this is what Trump really doesn't want, is companies literally buying land at a fraction of the price of what it will cost in Texas.
Employment costs lower.
Costs lower, building costs lower, but all the products going across the border.
All the jobs go somewhere else.
There's Mexico's been one of the most targeted countries, of course.
Yeah.
And that's something they're trying to work through.
Yeah. And they will. And in a broader sense, we're talking about things that will in time. He won't be president in 3.5 years' time. So, and
what are they going to do? Knock down this thing and go and set up, and then it wouldn't start producing for 3.5 years. So and then it'll all be gone.
This is where the DCFs kick in well beyond the length of the presidency.
Yeah.
So, one of our longest favourite stocks has been Soul Pattinson and therefore Brickworks, which have for a long time had that cross-shareholding ban. Huge news from them out that this started this week, that they were unwinding that cross-shareholding, which has been talked about for as long as I can remember. And I started watching this stock in 1994, which was my second year in the industry. So It's been a hell of a journey watching it, but that was possibly the biggest announcement in that period. And it's a big stock for us at TMS.
Yeah, well, I think it would soon now be, when these come together, it's going to be our biggest holding. And that's mainly been because, when I started here 20 years ago, it was one of the first stocks that came into small number of clients' portfolios. There'll be a couple watching this video still, hopefully, and still got them. So, I think the funny thing is, the transaction seemed so logical and simple that they announced. You thought, why didn't they do it before? And I'm sure there's reasons for that. But it's going to create significant value for shareholders, I think. It's going to mean a much cleaner vehicle, easier for the market to value, and it's probably going to track its asset backing a lot closer. But the big thing is this ETF buying that's going to happen in the shorter term. They're playing, Sigma was one that I'd missed, but David Zapilia played that beautifully in terms of getting the passive money flowing, and it's becoming such a big part of our market these days. Soul Patts is going to be a ASX 40 sort of company, and it was only just in the 200. So that's
it wasn't even in the 200 10 years ago because of the cross-shareholdings. Cross-shareholding means that it not only becomes a bigger company, but it's allowed by S&P to enter full weighting. So they've had reduced weightings in the main indices. So on Monday, we saw a massive move in Brickworks and a massive move as well in Soul Patts, Brickworks being the bigger beneficiary of the deal. And that really related to index buying initially. There'll be more of that. It's come off the last couple of days a bit, as it would. But again, the story is a good one. Why they didn't do it before is a good one, but it goes back to why did they establish the cross-shareholding? Because in the era of corporate raiders, that was the best way to protect the asset. And things have moved on in corporate world. It was the Wild West there, and it's not now. It's a highly regulated industry, so things don't need to be played that way. But it's a great win for everybody involved, and it's got a very, very bright future.
Yeah, I think the biggest thing for me, Jez, is Todd Barlow. It feels to me like Rob Milner's let him go. And, the takeover of Milton was a big event for Soul Patts, and that was a few years ago. and then this is the next. So I think you've got someone steering the ship who's genuinely trying to create value for shareholders and in a more immediate sort of sense, not thinking about 20 years. And, there's still a lot of levers I reckon they can pull to continue to do that.
Yeah, no, exactly. So really good. Now let's get into the current. So June is, as we said, a big time of year. What happens, Ben? Tax loss selling.
You get stuck into me. That's what seems to happen.
Contributions into super, pensions out.
Yeah.
Lots of movements.
Yeah, so look, the most important thing is to make sure you've taken your pension. Jeremy's drawn his. There are more serious consequences as of this year if you haven't done it. So make sure you've done it. If you're not sure, call us. And we've sent out an email about that as well. Talk to us about whether you think you've got some capacity to put some money into super and how the best way to get that in is. And of course, we will be in touch with a number of clients with larger super balances to talk about
the proposed legislation that will deliver the super tax. Yeah, and above 3 million per member. Which the important thing for people to know now is we're reading every day bits and pieces in the paper, and there's a lot of talk about it. We believe that the action time will be in the 25-6 year, not now. You don't need actually to do anything now.
No.
There will be the opportunity to do things, and we've got strategies that we're working on that will help.
Yep.
So, but A, we'll get in touch, and B, you do not actually need to do anything right now.
No, there is absolutely no reason. And, we've been going around speaking to a lot of different accounting groups and getting what they're advising their clients. And I think we've now got our head really around what we're going to do. It's going to be on a case-by-case basis. And, of course, this doesn't affect a lot of people that are watching this, but it will in the future.
It will in the future.
Hopefully, as we grow that.
Yeah, so it might be something ongoing we have to talk about as part of our planning, which we always do for the best benefit of the client. So it's a little bit different, but that's the markets. That's okay. Looking ahead, again, we come into a cooler part of the year. Plenty of movement, probably, Ben. Things to watch out for. Next RBA meeting's early July.
Yep.
Should be a rate cut now expected by the market.
You would have thought so.
Okay. Not a lot of earnings news now.
No, I think we've probably got another couple of weeks and then we'll go into blackout period, which is when most companies are unable to talk to the market. So then we go into a very quiet period in July before all the results drop in August. So, but we're going also into a seasonally strong period in America. The July month is typically the strongest in the US. We'll see what happens this year, but look, we're in pretty good shape, it feels like.
Good work. Well, that's all we've got time for. We'll be back in the new financial year with another Insights.